I just bought about $5,000 worth of gold and silver, and I plan on buying probably quite a bit more. You might want to consider doing the exact same thing yourself. Let's explain why. Listen, I have never been a gold bug. I've never been a fan of gold, I've never been a gold investor, I've never been a collector of gold or silver. This video is actually going to deviate a little bit. Let me explain how content marketing works. I make a bold claim by like slamming a kilogram of silver onto a table, as I did, and then what typically would follow is that
the Fed with the craziness and the destruction, and the only safe haven is going to be gold and something.
No. I want to try to level with you in this particular video and give the best possible reasons why people have been proponents and investors and fans of gold and silver and precious metals for a very, very long time. They're wrong. I happen to be doing it right now for reasons that I'm going to explain more towards the end. But if you don't have the patience or the mental capacity to make it that far into the video, I want you to take away one thing, which is that there is a time and a place to invest in these sorts of things. You only want to buy gold and silver if you have a real personal reason to do it, and I happen to have one. There's also going to be no promotions in this video. Yes, I do have DIYwealth.com, which you can go to, but in this video I'm not going to be shilling any particular gold or silver or precious metals supplier or dealer or anything like that. This is just going to be me expressing an honest opinion. I'm doing that in the hopes that you can make an informed decision about what you want to do for your wealth and how you want to allocate your assets, especially as we look ahead into what could be a pretty rocky 2023. So let's actually start with the case for gold. A lot of people claim that gold is the first and the best money, and that's just not true. Historically that's not true. When we talk about money, what we're talking about is a shared delusion. Money is only valuable because you perceive it as valuable, and because you can take it and go to a store and get things in exchange for your money. The same is the case with gold and silver. And people buy a lot of it because it's rare. If you add up all the gold that has ever been mined in the history of humanity, it would fill 2 Olympic-sized swimming pools, total. That's it. And so gold sort of became this sort of abstraction for wealth. The benefits of gold being considered a store of value is espoused as being superior to fiat currency. Fiat currency is just paper money that isn't backed by some commodity. If you take a look at this picture of an old dollar, you'll notice in the fine print here that it says you can literally go and exchange your paper money for an equal amount of gold. And literally, you could just take your cash to the bank and be like, give me gold, please. And that was the case until 1971 when the US came off the gold standard. Nixon was like, hey, what if, in order to grow the economy, we didn't have to acquire more gold? What if we just started printing money? And everybody was like, yeah, sure, why not? So one of the things that happened after the US left the gold standard is that the value of the dollar started declining because there wasn't a safety net anymore. The currency could be worth anything because the government could literally print as much money as they felt like at that moment. And it was really in the 70s and 80s and 90s where you had the people who said the dollar is destined for collapse, this is not sustainable, and they just started stockpiling a bunch of gold. But just because governments got off the gold and silver standard, that doesn't mean that central banks stopped caring about gold. And actually, since 2010, central banks around the world, China, Russia, the US, everybody, they've been just gobbling up gold. Nom, 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 nom. If you look at the price chart of gold, the price of gold has understandably gone up in the last 12 years. A lot. Generally speaking, gold has performed pretty well, especially in anticipation of trouble. So that's the Reader's Digest version of the economic story of gold. I'm, of course, leaving a lot of stuff out, and if that bothers you, but a lot of the people who are looking at this from an investment perspective, they really turn to 3 reasons why they like gold a lot: tangibility, portability, and privacy. Silver bar, a kilogram bar, that's a thing that you can touch and hold and move and store and transport, and if you want to pay somebody under the table, you can just be like, here's a kilogram of silver. And you know that silver is valuable because everybody on the planet would be like, cool, yes, I will accept that. Anyway, tangibility is important because what if there's an EMP attack? What if the global banks and everything end Banks have failed in the past. What if your checking account just goes away? What if you go to the ATM and you try to get stuff out and all of a sudden nothing spits out? Right now, the entire international banking system is pretty much digital. It's all electronic. And so if you have concern about that, well, then it makes sense to hold some of your wealth in tangible assets. And you know what? Gold and silver is good enough. So the other reason people really like gold is that it's portable. Say, for example, the world has not ended, but your country is in a state of disarray. Say, for example, you were in one of those places and you needed to bug out. Well, you could just take a roll of gold bullion coins and just shove it in your pocket and bug out. You can't really do that with your stocks. If you're just holding on to a little bit of bullion, it's gonna be hard for people to come and take that away from you. And that's the third reason why people really like this stuff, which is the privacy. If you own a house, anybody with a working knowledge of Google can look up what you paid, what your lot size is, do you have any tax liens on your property? Anybody can do that. But if you have a private stash of Krugerrands or Canadian Maples or the Walking Liberties, nobody's going to know what you paid for them, where you bought them, where you got them, where you're keeping them. You can just literally have stashes of wealth, like a squirrel, but a really well prepared and rich squirrel. Let's be real. If we're going to create an abstract proxy for money, a store of value, then what that abstract proxy needs to represent is the one commodity that we cannot get more of, and that is time. When we're talking about fiat currencies like the US dollar or the yen or the euro or things like that, governments can increase the quantity of money, but they cannot enhance the intrinsic value of money. And that's because money has no inherent time-bound scarcity. Whereas something like silver and gold, it takes time to make a mine. It takes time to build stuff to get things from mine to refinery, from refinery to person, from person to sell to other person so that they could smack a kilogram of gold onto a table for a YouTube video. All of that time factors into the intrinsic value of these precious metals. So that's the pro-gold camp. Here's the anti-gold camp. At the end of the day, what we're talking about is shiny rocks. Let's be real. While all this stuff is portable, it's not that portable. This is a kilogram of silver. It's a kilogram. Imagine trying to carry 10 of these across a border on your back. If you own a Scrooge McDuck vault of goddamn gold and silver, that's staying there. If the apocalypse happens, that shit is not leaving your safe. And while there is some argument that gold and silver is more, how should I say, durable than paper money, silver will tarnish. Gold can be destroyed or ruined or melted or lost. The whole argument for privacy thing, go back to 1933. The US government literally banned everybody from owning gold. It was a felony to own gold, and that lasted nearly 40 years. If all of that does not persuade you that gold is kind of stupid, on top of all of that, gold is just not that good of an investment. On DIYwealth.com, I often make fun of traders because most people who do too much with their stocks and their assets, their equities, their bonds, stuff like that, the average one of those people, the average stock investor and trader, gets something 3 to 4% annualized in the long term. That sucks. So the returns you get as a stock trader, barely better than inflation. And you know what? Gold, not really much better than that. Since 1974, when it became okay for regular ass normies to own gold again, the average annual inflation adjusted return for gold has been something 2%. Gold and silver and all these precious metals, they're a speculative asset. You buy them with the expectation and anticipation that some sucker sometime in the future is going to give you as much or more money than what you paid for it to begin with. You are speculating on that happening. It's not a real investment, like investing in a business or investing in a factory. Ultimately, any speculation, you are just buying it with the anticipation that it will go up in value or perceived value. That's it. I reiterate, we're talking about shiny rocks. And when I typically talk about investing, I'm talking about investing in stuff that actually makes things and does things and adds to the overall pool of human wealth that we have somehow managed to pull out of the void. If you are looking to invest your money, get rich, save for retirement, get a Lambo or whatever, does it excite you to risk your money on something that has barely produced better returns than inflation? So cards on the table, with the case for gold being made, with the case against gold being made, Why am I buying gold right now? I'm making a speculation. I'm not opposed to speculations, and you shouldn't be either. I mean, after all, gambling is fun, but I don't think you should gamble your whole net worth. But here's why I think gold and silver makes for an interesting speculation. The Fed raised rates, as you can see on this chart, faster and higher than at any point in relatively recent history. These rate hikes have caused something of a flight of international investment money back into dollars, or at least dollar-denominated bonds. And that caused the dollar index to grow against those other currencies, as you can see in this chart. At the time of me writing my notes, the US dollar index gained 9.7% in 2022, like so far. If I had made one of these stupid videos and like told you at the beginning of 2022 that the best investment you could have made this year was dollars, you would have thought I was a nut, and yet here we are. But the US is probably going to go into a recession 2024. And so like, if you are the total risk-averse investor, one of the things that you have to see is like, okay, recession happening, like, okay, let's get our monies and our value out of US denominated things because trouble is afoot. Anyway, long story short, right now we have two major catalysts that are pointing to a dollar declining. And guess where that leaves us? Right now, gold is moving in almost the exact opposite direction that the dollar is. Like seriously, look at this chart. So that just tells us that the escape from dollars to gold has already begun. Will gold actually protect us during a recession? Yes, but it's complicated. I originally set out to try to disprove that gold was a good recession hedge because again, I think gold is kind of dumb. And so here's what I did. I looked at how the S&P 500 performed during recessions. I looked at how the S&P 500 performed the year before a recession began. And then I did the same thing for gold. Gold during a recession, gold performance the year before a recession began. The results are in this table. As expected, during a recession, stocks, they don't do so good. In fact, they do pretty bad. But interestingly enough, in the year before, like leading up to a recession, when like all signs are pointing towards there being trouble ahead, the results of stocks are actually pretty mixed. Like some years they're up 12%, some years they're down 10%. Now, gold, on the other hand, look at the time during a recession. Except for one recession, gold value actually went up during every single one. On average, gold goes up about 4% during a recession period. But if you look at the year before a recession, gold tends to go up a lot. The average return for gold the year before a recession begins is like 35.6%. I don't know if there's going to be a recession at the beginning, the end of 2023, or at the beginning of 2024. But I do know that based on the inverted yield curve, that we're about 6 to 18 months out from a recession. I don't care if there's anything intrinsic to gold and silver that causes them to magically go up in value before a recession. Like there's nothing magical about them in terms of like a recession hedge. People just collectively believe that they are a recession hedge. And so buy it up before a recession, which sends the price up because it adds scarcity. And as I said earlier in this video, and as I will keep repeating, a shared delusion becomes reality. So to put it simply, gold and silver right now looks like a smart speculation. I think that that's what's going on right now, and I don't really much care if the value of gold beats the stock market. Because honest to God, have you ever held a kilogram of silver? Like, you feel powerful. That was the spiel. That was the gold spiel. The actual asset, the vehicle that gets you to more wealth, it doesn't really matter that much. And the one thing that I don't want this channel to ever be is, hey, buy this thing because it's going to make you a bajillion dollars. I want to present these assets and like the approach to these assets in such a way that you actually understand more about how economics work and how money works. And if you feel like I left anything out, feel free to throw it down into the comments. There are certainly things that I left out, and I'm sure that there will be some sweaty, angry person working in the financial industry just hot and horny to tell me all about it. I'm looking forward to it, and I'm looking forward to seeing you soon. Thank you for watching the video all the way through. If you like this video, don't forget to like and subscribe to our channel. And if you thought, oh, I would like to become more financially literate, I want to learn more about investing in detail, well, then check out my newsletter, The Legacy Wealth Monthly. You can click the link in the description box below. With the concept of becoming richer every month, Legacy Wealth Monthly is packed with information necessary for asset building through investment, and includes recommendations of individual stocks and commentary on current market conditions.
Legacy Wealth Monthly also features a column from Mark Ford, a multimillionaire who built his fortune from an ordinary salary to 5 billion yen in just a few years. You'll also find editorial by a Japanese analyst and a Q&A corner to answer your investment questions. We provide you with lots of information, all with the goal to enrich your life. If you are interested, please check out the details in the description box below. Take care.